G'day all, I'm James. Let's do a quick rundown of the markets and we'll start with currencies. Now, nothing's much changed since the last video. We have moved down a wee bit on the dollar index. And whilst I expect this to move down closer to 93 or 92, we're currently trading just under 100. I think we could get some retracement before that. However, we are holding below the 20-period moving average. Now we have broken down through Moab, so we're on our way down to a new lower level. You can see we had a big sweep out through the top, trapping the long side, and now breaking down through the short side. And if we look at a longer term picture on the euro, let me just squeeze this down, actually maybe go to the week chart. You can see where we are. Big sweep down through the bottom that was in line with the dollar index sweeping out through the top, and now we've broken out through the top. My target for the euro is first of all the 78.6% Fibonacci level and the top 200-period Bollinger Band on the weekly chart. That's at around about 1.18, but I think we could get up to about 1.2, which would be in line with about a 600 to 700 point move down on the dollar index. If it does play out like this, then we should see the pound moving up and the dollar yen moving downwards. Dollar yen's already moving down, as you can see. I was hoping for a little bit higher up to get this carry trade unwind to join the party here, and we might still get that. We've got an obvious trend line here, the 50-period moving average and various Fibonacci retracement levels. And if we do get a little bit of dollar reversal, we could get up to the trend line at about 147 and maybe all the way back into the high 150s. At the same time as we have a long on the euro US dollar, we have a short on the dollar Swiss franc, the Swissy. And there's just a play bouncing off the long-term weekly trend line and hoping for a bit of mean reversion and correction on this very extended to the downside currency. There's the long-term trend line, which we often play over and under. You can see some of the time we're under it, other times we're over, and we're now testing it from the top again. We're also short on the euro Japanese yen, and that's now moving down eventually. I think this might be the last attempt to get through that top there. The target's equal to the length of this flagpole, which would take us down to about 144, that black line down there. It's a pretty simple picture of a big move up, a bear flagpole, a bear flag, and now looking for the next move down. So it's looking pretty good. We're moving into some profit now. The top positions in some good profit. The bottom one approaching that level too. Going across the stocks, just coming off a wee bit today. As you know, please refer to the last video. I've covered this in some detail. Once again, somewhere around here, I think we're going to turn on the NASDAQ and the S&P. I'm allowing for a move up into 21,000. That's the 78.6% fib. But I expect that we'll probably attempt to turn around just before that into about 20.5 into this yellow order block. The 200-period moving average, which we tagged 2 days ago and moved down from, and the 100-period moving average, and the long-term channel, bottom channel line, which we're just underneath as well at the moment. Don't be tricked thinking that this is moving down from here. We might still get that move slightly higher for a move down. I'm hedged on the NASDAQ, hedged on the S&P, and I'll be looking to take profit on the long side of the hedge on both of these at slightly higher levels. There's my blob for the S&P. Even though we've moved down a little bit on the S&P as well, we haven't quite got up to the blob. It is Fed week this week, and tomorrow we'll find out from the Fed what their view on interest rates are. Remember, it's not just the announcement. I have a feeling they might even cut rates, even though the Fed Watch on CNN says not. But I think the important thing will not be so much the rates number, but what Jerome Powell says afterwards, and perhaps we'll get a look at the dot plot too. So we're hedged on both the S&P and NASDAQ, looking to take the long side of the hedge off for profit and then add shorts on when we get a clear reversal. I don't think we're going to get any very clear direction from now until the Fed announcement comes out. So we might just faff around in a range for a couple of days. But in the meantime, we are long on Mara, Target, Google, Coinbase, Tesla, and MSTR. I'm not going to waste time on Bitcoin, XRP, and crypto in general. I'll remain long. But remember, I'm allowing for a dip back down on crypto to the breakout level, the red line, at around 89,000, the Moab, the big Moab crypto level. We haven't added any long positions since that breakout, and so we're waiting for a dip back down again, or I'll add on a close above 100,000. One more small note of caution on this is that we do have a CME gap below us right here on this day chart. Also at around about the 89 to 90,000 level. We haven't retested or closed that gap just yet. And notice we've also got one above us right now. So we're in between two CME gaps on Bitcoin. So I'm holding that for a move above 100,000. We'll add some more on if we break and close above there. And in gold, we're now fully hedged. I put this up on X yesterday as well. We got short there. Actually, we've been short from much higher up, but we did take profit. We broke down through that small edge, but we didn't manage to close beneath the 20-day moving average. Very crucially, we've moved back up again. I've now hedged the entire position, just slightly below our short position actually, and we'll start to look to exit that at the 78.6% Fibonacci for a continued move down at around about 3,450. I'm not ruling out a retest of the high, potential double top. Gold likes double tops and triple tops, and maybe even a poke through and then a reversal. I still think that gold might need some correction fairly soon. If it doesn't happen at the 786 or around here, maybe from a slightly higher high. My target remains down here at around about 3,000, and at a stretch, we could get down to the second blob below 3,000. At the same time as being hedged on gold, I also took a long position on silver a couple of days ago, if you remember. That's now moved into some decent profit, and we're holding that in line with the gold hedge. So the long silver trade is now moving up in profit, and gold is also moving up with a long portion of that gold hedge also moving into profit. We'll take profit when it turns around, and probably the same on silver too. We have no positions on copper, still trying to hold support here at the 20-period moving average, and pretty interesting, along with silver, getting a little bit more of a bid, probably because of the industrial outlook for more production for chips and electronics, electrics and that sort of thing in the US. So all speculation right now. Let's see what Dr. Copper does in time to come. Right, on natural gas and oil and uranium, we remain long on URA, no changes to that. Brent crude, we're still long. We're actually trading WTI, and we're long from those two tranches at the bottom there. I think that we're now trading probably within a new range on WTI oil, between $50 and $70, and we're bouncing off the 50-ish area, not quite getting there just yet. My target for this bounce is back up to the breakout level just below $70, and then a continuation of this move down. I think from now on and during the rest of this year, we'll be looking to sell rallies into around $70, maybe slightly higher, maybe slightly lower, and then buy dips down towards $50. Again, maybe slightly higher, maybe slightly lower. For now though, we're long, we're buying the bottom off the channel bottom, looking for a move back up to around about $66, allowing for us to get back up to the 200-period moving average at around $70, and potentially even the top of the channel. And that could be all the way back up at $73, $74, $75. Don't rule that out. You can see at the same time Brent crude getting a nice move up with two naked or bare-bodied, naked wicked, no wick candles. Quite bullish there as well. Finally, the US 10-year just ticking up a wee bit again today. TLT moving down, frustrating and annoying. Nothing on the VIX, and then softs and grains, no changes to the last video. Ticking up nicely on sugar as oil ticks up, so that's encouraging. Cotton doing pretty well, corn coming off a bit, and not much on the rest of it. Well, folks, I hope you enjoyed that. Have a great trading day. If you'd like to follow this more closely, press the join button below this video. Join the channel. It's $1 a month, and I'll see you in the next video. And if you are a member of this channel, or if you are about to join, watch out for the notifications for members-only videos. There'll be one tomorrow. Take care.
So alive, candlesticks and movements flowing. Catch that wave, it's time to dive. Bulls and bears, they dance together. In this market, don't you slumber. Prices jumping, floors and ceilings. Ride the rhythm, feel the thunder.